Well, last week, the Central Bank of Nigeria announced that 17 commercial banks have submitted requests, as at last month, to restructure over 32,000 loans for individuals and businesses impacted by COVID-19 pandemic. Now, the pandemic, according to the World Bank, has become a threat to stability in the banking sector and could push another 5 million Nigerians into the poverty bracket. The 32,000 loans for individuals and businesses represent 32.94% of total industry loan portfolio, with the manufacturing and general commerce sectors constituting the bulk of the restructured facilities. What is the implication of this loan restructuring, and what is the best way to go about this? I'm being joined by the CEO, Hydrocarbon Advisors Limited, Mr. Hakeem Adedeji. Mr. Adedeji, good morning. Thank you for joining us on the show.
Good morning, Chimeze. Can you hear me, by the way?
Of course, I can hear you very well. Well, recessions are usually accompanied by a high rate of corporate failures and unemployment. Nigeria is reportedly already technically in recession. 32,000 small businesses have already applied for debt restructuring and moratorium. Some are of the view that this is only a drop in the bucket and represents part of the small business segment. Well, the big corporates who constitute the bulk of systemic credits are already in trouble. Let's look at the oil and gas sector, for instance. That, of course, is just a highly specialized area, but a critical source of export earnings for Nigeria. The upstream oil and gas sector, for instance, is saddled with non-performing assets and negative cash flows, primarily because of falling oil prices and increasing costs of production. What restructuring model should be adopted for this sector?
Okay. Hi, Chimede, once again. Thanks for having me. I think let's just start from just basically assessing the quantum of these loans, these oil and gas loans. If you saw the recent, when I say recent, March, something that Augusto brought out, Augusto & Co., the rating agency, it looks like the entire oil sector makes up about 32% of the total bank loans as at the end of last year. Now, that's a third of the entire loan. That loan book, that's the 32%, is hugely affected by this COVID problem, by the by the competition between Saudi Arabia and Russia, and we've seen huge declines in the oil prices. Okay, now we're not even sure whether there will be another. I think what we're seeing in America now is that there is a second wave likely of the COVID. And so what that means is that it looks like the oil price will sustain some level of uncertainty, a huge level of uncertainty, which then means that loans in that sector, loans that have been taken out by the borrowers, will become more challenged, even more than usual. Let's recall that just before COVID, we were just getting out of the last recession in Nigeria, trying to get rid of the bad loans. Now we're faced with this, and so I think, in general, before we launch into anything, I think in general we're going to see even more uncertainty, and then the books of the banks are going to look not so clean, not so good as they have probably been, and restructuring strategy would have to involve some form of extension of the loans. Because when you're not earning as much money, that means that you can't pay the loans on time. You cannot pay them timely and orderly. So you will have to look at forms of restructuring. That means that, that would mean that you would need to extend the quantum. That you would need to extend the tenor of those loans. So whereas you had a 5-year loan before, you may just need to reduce the payments, okay, and ask the borrowers to pay you back over 7-8 years. And I think the central bank is on the right track by asking the banks to perhaps look at some form of measures.
Well, some of these companies will advocate a total debt cancellation, considering the amount of money they spend in terms of production cost is very high. Would you also agree with that perhaps total debt cancellation should be also a way to go?
Well, let's just assume. Let's just put some numbers into play here. I don't have exact figures right now, but assuming that the entire market, the loan book is about $24 billion, for example. Okay, and then somebody says a third of that loan, let's just write it off. That's utter rubbish, as far as I'm concerned. I mean, that shouldn't even come into vein. Now, look at the commercial enterprises that we're talking about. We're talking about viable companies who are supposed to be making money, albeit lower amounts of money. Okay? You can't just write off loans that are likely to be paid, even though you may want to extend the tenor, but you can't just write off $8 billion and expect nothing to happen. The entire banking sector is going to collapse. The economy is going to be affected hugely. And I'll be surprised if we still have the economy that we had just about a year ago if you have to write off that. So for me, that is utter rubbish, I'm sorry to say. And I don't think this is, I mean, anybody should be considering that.
Now, this is just about the upstream. What about those in the downstream? We just heard the PPRA now saying that they are insisting on price control. With this price control thing, is it not going to affect those companies in this downstream sector?
Well, I think it would. But you see, what you have is a unique situation whereby the government is re-insisting that it would maintain control of prices. What that means is that prices are no longer subject to market forces. When you have such situations, what it also means is that government will continue to subsidize. Now, how do you continue to subsidize in a situation whereby you have a budget deficit, you are going out borrowing, there are certain programs that you can't meet, okay? So I don't know, I don't understand. And look, I think something that I was saying to somebody yesterday, who actually enjoys these subsidies that we're talking about? We're talking about people like you and I. Suddenly, a lot more of us who drive cars are actually taking more of these subsidies than the common man on the street. So why sustain, why keep a subsidy system when you can actually, make money, when you can actually sell this petrol for more without the subsidies and then divert the money to social programs? So I don't know why PPRA is insisting, but it looks like government is going to have to sustain this program for quite a while, and thereby, as far as I'm concerned, personally, wasting money on subsidies that shouldn't be. Why subsidize the oil petrol prices?
Now, another sector saddled with non-performing loan is the power sector. It is said that the power sector loans that are non-performing are in excess of about 1.2 trillion. This is about 7% of total risk assets of the Tier 1 banks. Now, many analysts are of the view that this is a drag on banking profitability and an impediment to economic growth. What debt restructuring formula would you recommend to help alleviate this problem without exposing the system to a moral hazard?
Again, one needs to consider what these loans represent. A lot of these loans were given to the discos in order to purchase these assets. Okay? Now, you have gone ahead and purchased the assets with loans, but you're not making as much money as you estimated that you were going to make. Whether this was an erroneous assumption that you were going to make tons of money or not. You're not making that much money. Why are you not making that much money as a disco? I think a large part of the sector, a large part of the problems in the sector has to do with the fact that, again, we continue to subsidize power. Why are we subsidizing power? I don't know. Well, you can have a social agreement for subsidizing power, but do you subsidize power to even the people who can afford to pay power? Okay? Or do you subsidize power to people who don't have the means of paying that power for that power? That's one. If you continue to subsidize, what that means is that you will continue to incur large government deficits and large, for me, it's a misallocation of resources. Now, you have these discos who can't make money and who, from what I can gather it looks like their regulation is not that certain. It looks like they've turned out to be not so profitable businesses. Then you now look, how did they get there? Okay, they got there by purchasing assets at overvaluation, overvalued prices. Maybe some people have actually expressed that. You got there because you can't really get market prices. So what next do? You have to further extend the loan portfolio. You have to further extend the loan terms that are given to these guys. But something, Chimezie, that I think is very critical in this market is that a lot of these people, whether you have oil companies, whether you have power companies, we need to start reassessing the basis of the loans. Who are the guys who are managing these companies? Okay? Do you want to continue for another 5 years? Do you want to continue for another 7 years to give loans to people who are not managing the companies well, who have large, unnecessary costs, whose costs per unit are much higher than other parts of the world? Or do you want to say to yourself, I've had enough, I'm taking over these companies? But then, when you want to take over an oil company or an oil license or a power or a diesel company, then you need the government's approval for that. So, to a large extent, unless certain changes happen in the ownership to allow the banks to exercise their rights to the security, to actually kick out bad management, you may not have much of a choice but to extend the loans. That's my view.
All right, now AMCON was set up as a stabilizing institution to help detoxify risk assets of banks. Now, with the existence of AMCON now that buys non-performing assets of banks, do you think the debt restructuring industry can be viable when AMCON is there as an alternative source of liquidity and long-term funding?
Well, put it this way, AMCON was set up for a good purpose. And it actually borrowed lots of money, I think about 5 trillion. Now that bond is due to be repaid. I think in less than 2-3 years. You've got to ask yourself first, to what extent has AMCON made the money, okay, in order to repay, to retire these bonds? I would want to ask questions about that. Now, as to whether AMCON will actually crowd out a restructuring market, I don't think so, because AMCON has a finite portfolio. And I believe that, there's only so much money you can put into AMCON, okay? And honestly, AMCON is on one side and restructuring in the market is on another side, because AMCON cannot take on all of these loans anymore. So there is still a market, there's still a viable market, there's still a viable model in the private sector for restructuring, as far as I'm concerned.
Now, in a post-debt restructuring environment in Nigeria, what do you see as the benefits and, of course, the risks to the economy?
I think one major risk that I'm still concerned about is you restructure the debt. What are the criteria? Okay? Did you, at the point of restructuring, did you have other options, other alternatives? And such alternatives could be, you've got a badly run company with a high cost base, you take it over as a bank and you run it and sell it to another company. That's one thing. The other point is, or do you stay with bad management for the next 5 to 6 or 8 years of the restructuring? So we've got to ask ourselves the questions there. So those are the risks, okay? Now, what are the benefits? By restructuring, what you're doing is that you're taking out the bad loans from the bank's balance sheets and you're putting it into a better form, okay? That can only be good in terms of liquidity for the banks. That can only be good in terms of, you've actually tackled the problem and the banks can hopefully attract new capital into their balance sheets. So I think if you put these two things together, then you may well have a situation whereby the banks can again go out and lend money, which is what the banks are supposed to do.
Now, stress tests, which have been adopted by advanced economies, have helped banks to mitigate these problems before they become manifest. What is your proposal for policymakers to be proactive before this ticking time bomb explodes?
Okay. Now, indeed, a ticking time bomb. So my view on that is, look, when last did we do a stress test? I remember that there was a stress test in 2016. Has anyone been done since? I don't know. There may well have been one. But what you will find in countries like America, countries like, countries in Europe, is that these guys are regularly doing stress tests even before even before crises happen. Okay? Now, why do you do that? You've got to do that because you've got to be able to anticipate trouble. If certain things are happening in the economy, then you've got to say to yourself, and what are these stress tests for? What you're doing is that these are factors that are happening, these are things that are happening, and what if such and such what if such and such, economic actions happen? What if we have a COVID, for example? What if we have a pandemic? Even though not many people could actually anticipate that. What if, the loan portfolio of banks gets to this level, okay? And you do those stress tests to see what the impact will be on capitalization, on profitability, on the continued existence of the economic system. So you don't have to wait for a COVID to happen. So I asked myself, when last was the stress test done? If those stress tests were not done, then I think this is a good time to do that. Well, it's not the best time, but you might as well start now. So the point is, we've got to get it into our system. We've got to get it as put it down as a practice that should happen, not before a crisis, but not at the point of a crisis, but right now at a point where you can anticipate, several things happening, several headwinds happening in the market. And stress tests can also be, positive anyway, because what they allow you to do is that they allow you to anticipate results, consequences, and then you can start taking policy actions in order to correct what you anticipate will happen in the future. I don't know how disciplined we are in terms of the regulatory actions on subsidies, but if we're not, then we're setting ourselves up for a big fall. And I think it's not just because it's also government, as a whole.
All right. Thank you very much, Mr. Adeliji, for your time. Mr. Hakeem Adeliji is the Chief Executive Officer, Hydrocarbon Advisors Limited. Thank you for your time.